I think the stock that everyone's really, that's caught everyone's attention has been Honasa. Just look at it on Jefferies' numbers itself. They are estimating 260 crores of net profit in FY26. Even going by that estimate, the current market capitalization is around 15,500 crores. So it's trading at around 59 times, even assuming the profitability goes up in such a manner. And earlier this morning, we had highlighted this point that one of the factors could be that the float is very limited. You've done some more analysis on that.
Well, the float on, Honasa Consumer is limited for a variety of reasons. We all know that, it's been a big mover. So Honasa Consumer is up nearly 36% this week. From the post-listing lows, it's up 84%. The numbers are just moving higher, largely because the stock is now at the high point of trade as well. Reasons for rally, you can pin it down to a couple of them. The first one is, good second quarter results. But just before that, we had Jefferies initiating coverage on the stock, thereafter increasing their target price, etc. as well. But the biggest thing when it happens, to be such big moves on a stock is lack of available liquidity. Now, why do I say that? Well, because for companies that list for a short period of time, shares are locked for trade. How much are those shares which are locked for trade? Total shares on Honasa right now are close to 32.17 crore. If you just take a look at the data from the exchanges, 1.18 crore shares are currently locked till December 2nd, 2023. The other 1.18 crore are locked till Jan 31st, 2024. So up until Jan 31st, 2024, we have around 2.4 crore shares which are locked in. Come May 2nd, 2024, we'll have another 15.76 crore, near 50% of the company's equity coming in for, being available to trade as against being locked for sale right now. And then the next May, that is May 2nd, 2025, we have another 6.5 crore shares which open for trade. So what does this basically mean? All these four are close to around 24.5 crore shares of the 32 crore shares which are locked in right now. So shares which are free for trade are 7.5 crore. That's just about 23.5% of the company's overall equity, which is free for trade. So when you have a large chunk of a company's overall available shares locked for trade, everyone on the street is eyeing just that small chunk. And as a result of which, we see a big move on either side on the way up. This time it is on the way up. So there are, more buyers and less sellers, as a result of which that explains the big move that we're seeing on Honasa. Not to take away from the strength that we've seen in the company's fundamentals and the business, and brokerages liking it as well. But these exaggerated moves could be a function of lack of liquidity as well. And that explains the kind of move that we're seeing.
Indeed, Mangalam. The last, excluding exceptions, I think for the last year, they made only around 11 crores profit, which brokerages are anticipating, like Jefferies, they're talking about 262 crores, for FY26. So, yes, the numbers are good, but part of the reason that the stock is moving in this sort of a manner is because of the limited float that's available in the market. I think the real game starts once some of these stocks that are locked in case there is some selling, then we'll see how things move from there.
And the test of that will first be the week after next week itself, because the first tranche, almost 3.5–4% equity, comes in available for sale on December 2nd. December 2nd is a Saturday, so come December 3rd, or rather December 4th, we will have the first test of that. And those who have got those shares, the stock is still around 30% higher from its issue price. So will they look to cash in after making 30% in a month or so?
What a tricky situation, right? You go in there, you apply, suddenly you're making 30%. What do you do? Should you take money off the table? Do you believe it's a big long-term investment? Time will tell. Mangalam's been on top of this, so keep an eye out on that one. For the time being,